This is a time of great opportunity for BHP. The resources we produce are essential to the energy transition and global economic growth. Our products are fundamental to the way we live now and into the future. Now more than ever, we need to provide the world the resources it needs responsibly and sustainably. Imagine what we can achieve if we continue to think big.
Hello, good morning or good evening, depending on where you are. My name's Kate Southwell, and I'm delighted to be here as part of the IMARC online conference with a phenomenal group of panelists here to discuss considerations for board members as we look ahead to 2021. I'm very happy to be joined by Vicky, Siri Genik, Dr. Vanessa Guthrie, and Fiona Robertson. And between them, they have deep knowledge and experience of both leading and advising resources companies and industry associations. These are experts in risk management, in corporate governance, and in strategy, and in navigating challenging times like the ones that we find ourselves in today. And I'm hopeful that this discussion will bring us many practical insights and tips and advice for board members as we look ahead to 2021. As a board member myself, sitting on the board of a TSX listed company, I'm acutely aware of many of the challenges that we've faced this year, but as we know, our job is to look ahead and navigate these uncertainties and plan for the future, as well as the present. So without further ado, I'd like to kick off the discussion. And the first theme that I thought we should address is the structure and organization and leadership as we see boards and companies today. As we know, the structure of organizations and of companies themselves and of boards has rapidly evolved this year and continues to evolve. Corporations are more decentralized, and board meetings are being held remotely and will be for the foreseeable future. We're unable to attend, most of us, the operations of the companies. So we're more dependent than ever on the quality of both the management teams and the people we look after and the information that's coming to us as a board. So I'd first like to turn to you, Fiona. It seems that in these challenging times, culture is becoming one of the most important defining factors in the success or failure of companies. Can you tell us a little bit about, from your perspective, the key elements of culture and the most important elements to companies specifically in the resources space? Over to you, Fiona.
Thank you, Kate. Look, for me, culture starts very much with the tone at the top. Culture has to matter to the board. The board has to care about the organization's culture. But more critically, the leadership team has to be genuinely committed to building a positive culture through clear communication of the company's purpose and values, and through their own actions to promote engagement, collaboration, empowerment, and accountability within a clearly defined and a clearly articulated framework. So that as an organization, the employees understand what the organization is all about and what's expected of them. For me, as an audit and risk chair, at a time of increased uncertainty and heightened scrutiny from regulators and the wider community, an open and transparent culture makes for a much more effective risk management framework, risk management environment, as compared to a siloed and bureaucratic compliance function where people are afraid or disinclined to raise concerns and speak up. I mean, I think we've seen the pitfalls of the latter type of approach to risk management and compliance in recent governance failings, both within our industry and more broadly in other industries, for example, as highlighted by the Australian Banking Royal Commission. So look, for me, culture is absolutely critical to good risk management as much as a high-performing organisation.
Thank you, Fiona. You raised some really interesting points there. I mean, you talk about the culture and setting the tone. I mean, Vicky, from your perspective, is it a board member's individual or perhaps a board as a collective group responsibility to shape the culture and values of an organisation? And for example, should board members be more selective about the boards they join or perhaps leave if they feel that the culture of the company isn't aligned with their values? Over to you.
Yeah, thanks, Kate. Look, like Fiona, my view is the buck stops with the board as a collective on the culture of a company. The values of that company comes from the board, whether it be care, integrity, sustainability, excellence, respect, collaboration, etc. And how those values are put into practice throughout the company, the way employees are held to account and empowering the workforce to get the job done. I'm also a very strong believer of the fact that the values you walk past are the behaviours you accept. So the existence of a complaints hotline, investigating any issues without recrimination is also key. The board as a collective, in my view, should take regular pulses of the workforce to check the culture is embedded down through the company and to bring to light the things we do well as the areas for improvement. I think at board meetings, there should be regular discussions to debate if the leadership is actually living the values from the company. From an individual board perspective, I think non-executive directors have to be very discerning about the boards they join to ensure that the values of the company that they're joining are in line with their own. And as you say, in times of COVID, the face-to-face interactions between board members and sites, and indeed with leadership team and sites, has been very, very difficult. One of the boards I'm on, the board members and the leaders in particular states within Australia are visiting the sites in that state and then coming back and reporting to the board. But now with the restrictions partially easing, just this week, one of my boards met in Canberra, where all the Australian-based directors got together, and the difference is enormous. From the face-to-face interaction, the humour, the camaraderie, and the tone was significantly better. So I think it's going to have to be a balance for the board as a collective, as well as the non-executive directors individually moving forward.
Mm-hmm.
Kate, might I add there?
Please do.
One of the challenges of COVID, of course, has been being able to see and live the values in the boardroom. And one of the things that we've introduced at a couple of boards is when we do a board assessment and feedback at the end, a meeting effectiveness, is that we actually do it according to the values of the company. And so we actually challenge ourselves in the boardroom, are we behaving according to the values of the company within and amongst our own team? I think that's been a very powerful message to management, that we're prepared to self-reflect on our own values and our own behaviours, and it really shows the board living their values as opposed to imposing values on the rest of the organisation.
I concur, that's very, very important. And having those board sessions where you will talk about how you interact with each other, with the lead team, and holding yourselves to account is pretty important.
You raise a really excellent point, which is it's often perceived that boards are sitting in somewhat isolation and can set these lofty goals and aspirations, but they're not actually dealing with the difficult issues on the ground. So I think that line of communication, and as you say, Vanessa, setting the tone from the top is incredibly important. I mean, if I could press you on something that's become more controversial and perhaps topical this year, the issue of compensation. I mean, do you see the companies that you're working with taking a hard look at compensation from the top down, perhaps changing the structure of KPIs or thinking about a different way to reflect these challenging times in a compensation structure? Any views on that from your end?
Yeah, I think in about April, across all of the corporate and in fact even non-corporate boards that I'm involved in, we really actually put a hold on any compensation increases for the year. We just said this is not a year where, irrespective of the performance of the company or the organisation, it's not a year where we could reasonably and rationally allocate incentive payments. Now, fast forward 6 months to where we are, and we can, I think, see a two-speed response to that. Those companies and organisations that have been devastated by the coronavirus, the impact of coronavirus, both directly and indirectly through economic impact, and those that have actually flourished, weirdly or ironically, as a result of what's happened in 2020. And so the real challenge for us now, I think, as board members, is not those organisations that have been deeply impacted in the negative, because what the decisions that we, or the inferences that we made in April hold true. It's more about those companies that have actually undertaken the cost cutting they needed, been able to survive and in some cases thrive, and beaten their KPIs. What do we do for those organisations when they sit, and management have done a terrific job of coming through the negative impacts, the economic impact? What do we do for those people when we know, some of their customers, for example, or some of their suppliers have been deeply impacted in the negative? That's, I think, the most challenging question for boards right now, is where we have this two-speed, and what do we do? I might add to that, one of the contemplations for boards around that is changing KPIs at the board's discretion is really fraught. Investors don't like it, proxy advisors don't like it, fund managers don't like it. So I think if you have a calendar year-end board, thinking about changing your KPIs is something we really need to be very thoughtful and contemplative of, and seek feedback from the investor market before you go there. Even if it is to change KPIs to address something as global and as all-encompassing as coronavirus has been.
Kate, if I could just add something to the comments that Vanessa has made, which I entirely agree with, but I think we're going to see perhaps even increased challenges in the remuneration space going into 2021 as a consequence of the uncertainties that we face coming out of COVID, and not really knowing, where economic demand is going to pick up and where it's going to lie. In the boardrooms that I'm involved with, and indeed I've heard about from others, the setting of KPIs for 2021 is particularly difficult. In some cases, setting those KPIs has been postponed a few months so boards have a clearer idea of what the landscape for 2021 might look like. But I think we may very well see a need for increased use of discretion next year as a consequence of the uncertainty that we currently face. And I think we are going to have to see increased engagement with institutional shareholders and with proxy advisors around remuneration and reward of KPIs over the coming year. So it's going to be an interesting time.
And it's interesting, when I was reading a recent report, I think from Stanford University, and actually the number of companies that adjusted their compensation this year is much less than you'd anticipate. I think it was less than 20%, and it was mostly, as you'd expect, in the aviation sector, manufacturing, retail, etc. But these are certainly, as you say, decisions that we need to be thinking about ahead of time, looking ahead. Even in a post-COVID world, there will be substantial uncertainties next year. And as you say, I think the true test of the board's leadership is navigating those uncertainties while maintaining a fairness and appropriateness and accountability for executive compensation. Siri, maybe over to you. I mean, what does, in the context of of executive compensation and leadership. I mean, what does true leadership and stewardship mean for you right now? What are you looking for in the companies that you're working with?
So I'm going to zoom out a little bit. So the points that Fiona and Vicky and Vanessa have raised are absolutely core to the internal stakeholders. When you opened the conversation, you were talking about culture. Culture includes also this understanding of the global environment, of the ecosystem that the company is actually acting in. So of course, compensation is a key driver internally for stakeholders. Shareholders are very important, but then you have to not lose sight of all the other stakeholders. And we've had some challenging examples recently with sometimes not as much foresight as boards could have had in managing communities, suppliers, vendors, unions, and all of those are part of a company's ecosystem, and they're all important in different in different ways and different levels. And I think one of the core responsibilities of a board as a team and also individually is remembering that at the end of the day, we have a fiduciary duty to all of our shareholders and stakeholders. And that means we have this duty of care, this duty of accountability, of transparency for everybody all together to deliver a result. So we need to constantly bring those shareholders and stakeholders to the front and remember that the success of everybody is going to be the success of the bottom line. And I think sometimes we do get carried away, issues more specific as compensation, as KPIs. But at the end of the day, if there isn't something in it for everybody, and if that culture doesn't reflect on all our stakeholders, then, or let me shift that. If we can involve all of our stakeholders in the care and the concern, the transparency, building trust, then we're really successful. And I won't say coming out of COVID yet, but as we go through COVID and we sort of start seeing some positive potential hope results, those that have done very well, and not only those have had strong bottom lines, because of course gold has been doing so well, so how can you not see that? But it's also those communities, for example, in the Arctic, that have been able to continue to make sure that nobody got sick, that from a health perspective, we didn't have to worry because there were no doctors and no ventilators. So in Baffinland, for example, huge iron ore company, the first priority was to make sure that all the community was taken care of, had gone home, had all the protection they needed, food on the table, paychecks kept coming in, that local suppliers were paid for up front so that they didn't have to worry about being able to pay their employees. So money becomes an issue, but money for everybody: food, protection, health and safety, empathy. Some of the companies didn't have strong bottom lines at the end of the day, or really increased shareholder results, but the overarching results were very positive because nobody was sick, everybody was protected, and everybody felt that the top cared. And that, to me, is really right now how I hope the boards I participate on, and I'm sure all of you participate on, are looking at, are showing how culture really, as they say, has a strategy for breakfast. With a strong culture, you can weather quite a lot. So those are,
if I may add to that, please, Siri.
Of course.
I think that every company now realizes that their fiduciary duty is not only to their shareholders, but to the broader community. And, you know, everything that you have said, I would totally concur with, that it's the care for the people around you, the communities in which you operate, your employees. We had a recent issue with one of my companies with bushfires in Canada, and being able to actually focus on safely shutting the operations at the same time as moving the community out of danger was the paramount importance for the management as well as the leadership as well as the board.
Yeah, thanks, Vicky. I mean, and you touch on something that's obviously at the forefront of almost every board agenda, I think, this year and looking ahead into next year. Sustainability and ESG, how do we reflect that on our board agendas? How do we make that part of our business strategy? Because resilience has been seen to be in some ways the most valuable asset that companies have these days. I mean, in terms of the increased focus on ESG, Vicky, do you think that boards have the skill set already to navigate the additional requirements that Siri's talking about in terms of stakeholder and community engagement, as well as, you know, new disclosure requirements, the TCFD, etc.? Are boards equipped for the changes that are coming?
Thanks, Kate. Look, I let me talk about ESG first. You know, along with safety, in my view, it's the most important issue facing boards today and for the foreseeable future. Not only the internal focus and doing the right thing by the environment and all the stakeholders, but increased pressure from investors, regulators, and banks on being more sustainable in our production. You know, us as a resources and mining industry, you know, we're pretty poor in selling the importance of our industry as we move towards a cleaner energy future. So how important mining is in decarbonisation, and you know, without the products we produce, there'll be no windmills, no solar panels, no batteries for electric vehicles or storage, and no power distribution. So when we look at it from the board and the skill sets, I think the very diversity of skills on a board means that not everyone has to be an expert on everything. But on all the boards I'm involved with, all of the non-execs sit in all of the subcommittee meetings. So even if we don't sit officially on that committee, as we feel it's important to actually increase our knowledge base across the company. You know, sustainable production is a passion of mine. So I've recently taken up a NED role on the Carbon Market Institute, which is the leading independent industry group in Australia that assists companies to accelerate their transition towards zero net emissions by 2050, and other things in line with the Paris Accord and this TCFD framework. So that for me was important that I learn more about that so I can take that back and add greater value onto the sustainability and risk committees of the boards in which I sit. So I don't think everyone on the board needs to be an expert, but I think taking an interest and building out a level of knowledge is really important.
And perhaps, Kate, to add my experience of it, given that my background is sustainability, I've been delighted in the trend of the last 10 years to see sustainability become more of a mainstream conversation in boardrooms. I liken the skills around sustainability and ESG to the skills that every board member should have around financial performance. Not everybody has to be an ex-CFO or a CPA or a CA, but every board member needs to be able to understand a set of accounts, needs to be able to understand all of the financial metrics that might drive important decision-making. And I think sustainability is actually emerging as a second plank for board members of skills and knowledge that board members need to be alert to the coming trends, but also very much thoughtful, as Vicky points out, thoughtful about and knowledgeable in the areas of sustainability that each company might have to address.
Thank you, Vanessa. Yeah, incredibly relevant right now. And I think, Vicky, you've touched on something that I think is actually relevant, which is boards knowing what they know, but knowing what they don't know, and knowing when they need to get experts to advise them, consultants, you know, people who have the depth of knowledge and experience to guide them. And there's no weakness or inadequacy in turning to experts when, as you say, we're dealing with very technical, very specific matters. And I also like the point that you made about cross-pollination of skills, of making sure that people are benefiting from their expertise, I guess challenging each other a little bit more. I mean, to take up the perennial discussion on board diversity, in particular cognitive diversity, any views that you, I see you nodding, Vanessa, do you have any views on how boards can improve their cognitive diversity as much as anything else this year and next?
It's very easy to fall into groupthink. And one of the key ways, I think, in any given board, and one of the key ways that I've tried to maintain that cognitive diversity just for myself is to make sure that my portfolio of boards is diverse in and of itself. It's very easy, I think, in becoming a board director and building a portfolio to become quite narrow in your selective areas. And it would have been very easy for me to simply stick to mining companies, which is what I know best. But I stretched myself to be outside of that and have to grow my own thought processes and learn about markets that I've not normally touched on, to be able to contribute both there and in those boards where I'm actually very comfortable from a technical point of view. And I think that goes to perhaps what Vicky was referencing when you're first, earlier on, when you're first recruiting for a board, you want to make sure, one of the earliest conversations in recruitment is generally, we want somebody from the sector who knows the sector. And perhaps that is the question mark for me. Maybe you don't want somebody from the sector, because if you challenge yourself as a board to bring somebody in who has a broad set of skills that will actually match but increase the diversity, the cognitive diversity in your boardroom, maybe that's what we ought to be thinking more deeply about.
And if I may add to that, Vanessa, the Carbon Market Institute is filled with professionals in sustainability and environment with far greater knowledge than I about those really important issues. But as someone whose career has mainly been as an emitter through, petroleum or mining companies, bringing someone on with a different background to give a different point of view and to bring up different points in the debate is really, really important. That may be age, that may be gender, that may be background, it may be ethnicity, but actually having different views at the table and debating those in a respectful way is very important on driving better outcomes for the company.
Absolutely. And I think it links, Siri, to your points about, taking a step back and looking at the bigger picture, looking at the stakeholders that we impact, the investment community. Obviously the investment community is now driving a lot of these conversations around sustainability. You see a lot of pressure, I think, from institutional investors for diversity and for cognitive diversity, as well as gender diversity on boards. Do you think the boards, perhaps you can give a Canadian perspective, the boards that you're working with are getting better at aligning themselves with their investors' expectations? How do you see that dialogue going?
Oh, I wish I could say that Canadians are better than anybody else, but it's a journey, and I think we've used in the last 10 years, as Vanessa said, there's been an alphabet soup of acronyms. There's been CSR and HSEC, and there's ESG, and then of course you throw in the TCFD. And I think we have to think about where we're going, this conversation, as stewardship. The word that I keep that is important to me in what I do as a person and how I work and how I participate in boards is stewardship. And I notice that often we talk about what's material to us as a board and for our companies, and we say, yes, we're going to go into the ESG reporting, and we do it, and our companies work hard and they deliver reports. And then we have our investors, and somehow the conversations don't match. And the investors are pushing sustainability. There's the principles of responsible investment. There's a number of associations that we need to make sure that we're participating in, but we also need to make sure there are conversations, that we're listening to each other and talking to each other. So if I said this sustainability stewardship is a journey, it starts with a conversation. And that conversation starts with, again, obviously all stakeholders. And in this particular case, with the investors. Investors' expectations may not be your expectations, and your reports may not necessarily address their expectations and their concerns. And so there becomes a mismatch, and it becomes sometimes frustrating. And there are many matrices out there, a lot of metrics, SASB and GRI and MCSI. But at the end of the day, it's not about the report. It's about how do you value stewardship and sustainability? And how can you have that conversation on a regular basis, not just before each quarter or before a banking conference, but on a regular basis as a partner, with what their expectations are, what your material concerns are, and how do they meet. And then you're going to start have a very interesting conversation about making sure that you're delivering value to your shareholders, to your institutional investors, and that it ripples through the community. So I don't know that Canada's doing it any better than anybody else. We certainly on that journey, we're working hard. Some don't do it as well as I would wish they would in our industry, because as Vicky said, it's a tough industry. It is an amazing industry, and it drives so much technology and innovation and so much opportunity, and it brings hope. Just a quick anecdote, one thing we are looking at in Canada is having copper rails and poles in all our public transport, because of course copper doesn't retain any bacteria. I mean, so that to me is stewardship and sustainability. And there's not a banker in the world who won't be proud to support a mining company, a copper company that's thinking along those lines. So I think it's bringing a lot of these different pieces. To Vanessa's point, if mining hasn't always, we do a lot of navel gazing, or we have. I think if we sort of pop out of that bubble and look at all the impacts we have around us, to all of the points that are being made on this conversation, we can make a huge difference in navigating through COVID and coming out of it, and continue to lead and bring so many academia, research and development, innovation and technology, and manufacturing, and all of the related industries into the pole to just be an engine to move on. And that's the resilience. Besides our own, it brings resilience to the entire global economy. And it's a bit of motherhood, but I really believe it's true. And I think as fiduciaries of our stakeholders, shareholders, that's something we should be proud to talk about, and of course walk the talk, very importantly.
Absolutely. And thank you for sharing your enthusiasm and your passion. And it's great to have an optimistic, encouraging, inspirational view of the path ahead, and how mining companies can contribute to that future, as you say. And it is a vision I think a lot of us, including this panel, will share. Fiona, any further thoughts on this paradigm shift? And it seems, there are opportunities, there are learnings, there's a great deal of structural change happening that is actually very, very positive. So what do you see as the greatest opportunities looking ahead to next year?
Perhaps picking up on some of the themes that Siri has already mentioned. Gender diversity for me has always been about creating the catalyst for diversity more generally, and promoting inclusivity. I think that we have certainly made progress in the gender arena, And I'm pleased to see that in some places we're definitely seeing that catalyst or catalytic effect happening with greater diversity overall and greater, or at least a move to greater inclusivity. Harnessing diversity that is a better reflection of society overall enables us to respond better to society's perceptions of our industry, both by harnessing that diversity internally and perhaps being more sensitive in the ways that we run our operations, but also through better external engagement, which is something where I think the industry has lacked perhaps in the past. The workforce of any organisation are its eyes and ears as well as its arms and legs. So they can be powerful advocates and educators inside an organisation, and they can be particularly powerful educators and advocates outside an organisation to make sure that the industry is better appreciated in terms of the wider community. There's some excellent examples of how such relationships have been fostered with the Indigenous communities in Australia, where, for example, engaging traditional owners in land rehabilitation exercises has used, traditional knowledge to improve rehabilitation outcomes. I've certainly seen that in Western Australia at the Granny Smith mine and in other operations over here in Eastern Australia. And the other side of the coin is that engaging those Indigenous communities has built better relationships with them, better understanding, and led to much improved socioeconomic outcomes for those communities. So all in all, I think it's a win-win. And for me, inclusivity is a real opportunity.
Thank you, Fiona. And nicely that touches on, the first topic that we discussed, which is culture. The culture needs to be of transparency, of accountability, and of diversity. And I think, with leaders such as yourselves, mining companies do have the people who believe in the value as a risk management strategy, as a strategy for the benefit of society as a whole, as well as the companies that you guys are all involved in. So thank you so much to our panelists today for sharing their insights, their expertise. We really appreciate your time, and thank you for being part of the conference.